Hello everyone, this is the pre-market report video for today 28th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday morning, as we discussed in detail in the last video, the positive Japanese inflation data made all the Asian market to open significantly positive and to close positive. Despite that, our Indian market opened gap down, mainly dragged by banking and financial stocks. However, after some time, TCS, Tata Motors and Airtel supported the Nifty and made it to close positive after two sessions. First, about TCS. Yesterday, Swiss-based largest investment bank UBS upgraded the TCS stock price to buy rating from earlier neutral rating, and also they said the stock got the upside potential of at least 17%. Which in turn made the TCS and the whole IT sector to close positive. Yesterday, Nifty index TCS was the top positive contributor. Second, Tata Motors was positive because Kotak Equities said that they expect JLR to reach the revenue of over 30 billion British pounds by FY 2026 with a margin of over 8%, and hence it increased the share price by near 3%. Regarding Airtel, yesterday in an interview, Airtel's chairman Sunil Mittal mentioned that Airtel is on course to achieve the target of 300 rupees average revenue per user ARPU. Just for info, in the last December quarter, Airtel's ARPU was at 208 rupees. Actually, it increased from 193 rupees a year ago. This 300 rupees ARPU statement made the Airtel stock to increase 1.6%. In addition to these stocks, realty sector also contributed on the positive side as there was an increased residential sales report in top tier cities during January-February time. About institution, again for the second day in a row, FII was net sellers. Yesterday alone, they net sold significantly for 1,500 crore rupees, and thus for the whole February month, the net sold value increased to 17,500 crore rupees. However, on the positive side, DII net bought for 2,850 crore rupees. So those were the quick takeaway from yesterday's market. Then coming to US market, before their market opening, US government released the January month durable goods order data, and Consumer Board released the CB Consumer Confidence data for February month. On month-on-month basis, durable goods order on January month contracted over 6%, which is more contraction than analyst expectation and significantly higher contraction than the December month contraction. Similarly, consumer confidence for February month dropped significantly from above 110 in January month to around 106. Here, both the macro data indicates the slowing economy, and it is what exactly market wanted, so the Fed might consider earlier rate cut. However, this market favored data was downplayed by two things. One, coming Thursday PCE inflation is due, which is more significant macro that can influence the rate cut. Two, couple of more FOMC members made the press conference and said that they were in no hurry to start the rate cut kind of statement. Both of this prevented the fresh buying in the US market. Hence, at present, US market kind of stalled. I mean, if you see the S&P 500, yesterday on the positive side, it's plus 11 points, and on the negative side, it went just minus 12 points. So, more or less, it's very much flat. Anyway, in the end, Dow Jones decreased 0.25%, S&P 500 up by 0.17%, and Nasdaq increased 0.37%. In case of VIX, it dropped 2% and moved below 13.5 from above 13.5 on last Monday night. About oil, based on unnamed source, Reuters released the report that OPEC plus countries are considering more voluntary oil production cut in the upcoming second quarter, which in turn increased the oil by around 1%. At the time of this video, WTI crude trading around $78.5 per barrel and Brent crude trading above $82 per barrel. Coming to Indian ADR, as a top line, ICICI Bank and Infosys closed positive, whereas HDFC Bank and Wipro closed negative. Very much mixed. However, if you look closer, none of the ADR changed more than 0.2%. So we can't say it's mixed, rather it is also very much flat. And the Gift Nifty is no exception. Earlier today morning at 3 a.m. Indian Standard Time, it closed at 22,230 points, equating it with the spot market. It is also indicating the flat to positive 35 points gap up opening. So those were the things happened yesterday. Now let's discuss the new Indian market related info. First, about Reliance, there are two significant info. One, regarding this Disney-Reliance Media merger, as per Bloomberg, Competition Commission of India (CCI) received the complaint that this merger will make the merged entity to control over 40% of the market share, which will make them as a monopoly. So there is an increased risk of investigation. Clearly, this is not positive for the stock price. On the other hand, Reliance joined with Qualcomm made an announcement that by end of this year, they together are going to launch an affordable 5G smartphone for below 8,500 rupees. This is positive news, so not sure which news will influence the share price. Second, as per SEBI filing, yesterday on the spot market, ICICI Bank bought 1.65% of stake in ICICI Lombard Insurance for over 1,300 crore rupees. As a top line, it's more positive for ICICI Lombard Insurance than ICICI Bank. Finally, Vodafone Idea directors has approved a fundraising of up to 20,000 crore rupees via equity dilution. In addition, they plan to raise the fund through debt for up to 25,000 crore rupees. Personally, I don't like if my shares get diluted, but this news was around as a rumor for the last two trading sessions. So let's see how market react to it today. As a summary, US market closed flat positive, hence the global momentum. Even Indian IT ADR, GIFT Nifty all indicating the flat to positive opening. However, have to be little cautious. At present, Indian GDP growth data and US PC inflation data both are due to release tomorrow. So that might possibly trigger either profit booking or also short covering anytime. And the possibility of fresh buying or selling is very low for both short and long term. Moving on, as per stock open interest, Gujarat Gas, GMR Airports, L&T Mindtree, Marico, ONGC, Muthoot Finance, Shriram Finance and Ipca Lab got an increase in open interest along with a negative close indicates the short build-up. On the other hand, ICICI Lombard General Insurance, Voltas, ICICI Bank, IndusInd Bank, JK Cement, Havels India and Biocon got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, there is nothing that I'm aware of before and during our market hours, but after our market hours for US, fourth quarter second estimate GDP data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, before yesterday, on the last two trading sessions, Nifty was in range bound with negative bias, but yesterday it was still in the range bound, however with positive bias. Thus, on the daily chart, it formed a medium green candlestick pattern, and if we combine the Monday's candle with it, together, it formed the bullish engulfing candlestick pattern, which is a very popular reversal indicator. However, as I said, it was not a long green candle, rather it's just a medium one. Hence, the placement is not convincing enough to call this as a bullish reversal. Here, if we see the last 7 trading sessions, on a closing basis, Nifty was always closed within the range of 22,000 to 22,200. And if it includes the intraday volatility, there also it was in the range bound but was extended to 21,850 to 22,300. Hence, now Nifty need to break the range on either side, both on intraday and closing basis, to have a conclusive direction. But if Nifty decisively managed to surpass 22,300, then the more probable scenario, call option unwinding, will push the Nifty towards 22,500 mark on the higher side. However, on the lower side, 21,950 remains a key support, which coincides with the 21-day exponential moving average. Then, in case of Bank Nifty, after 4 straight sessions of negative closing, it managed to close marginal positive. Thus, on the daily chart, Bank Nifty formed a green spinning top candle. This candle formation and the yesterday's price movement volatility both indicates the tug of war between the buyers and sellers. However, as we discussed in the last video, between 46,300 to 46,500, there are multiple supports such as 20 and 21-day exponential moving average, Fibonacci retracement, and the downward sloping resistance trend line, which all together now forms the very good support zone. Hence, as long as it stays above this zone on a closing basis, we can expect the positive momentum to continue. On the upside, for now, the immediate hurdle is at 47,000 mark, and then it's 47,200. Then on the downside, a significant decline below 46,500 could increase the negative momentum towards 45,500 in the short term. Regarding the options front, the maximum call option open interest was at 23,000 strike, followed by 22,500 strike and 22,800 strike, with meaningful new call option writing at 22,800 strike and then at 22,500 strike. Thus, from the options data, it indicates the immediate support is at 22,000. Whereas on the put side, the maximum open interest was at 21,500 strike, followed by 22,000 strike with new put option writing at 21,500 strike and then 22,000. Hence, 22,500 is expected to be the key hurdle. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.